Good morning, dear students. Today we are discussing the GST return filing with some amendments. This the latest amendment of 2026 is also included in this class. So here, professional overview of GST return compliance and updated with the 2026 rules and requirements are also included in the presentation. So what is GST return? GST return includes sales, purchases, output tax, and ITC. So it is mandatory for all the taxpayers, including nil returns. This is filed through GST common portal. And what are the different returns? Different types of returns. First one is GSTR1, that is for outward supplies. Monthly this return have to be filed by the GST regular dealers and quarterly by the composite dealers. GSTR 3B means it is a summary return and tax payment. GSTR 4 is annual return of composition dealers. CMB 08 is for quarterly payment. Then GSTR 9 is for annual return for common registered dealers. Then which is the due date of filing of these returns. GSTR 1, every month the dealer has to file this GSTR 1. The date of filing is 11th of the next month. GSTR 1 quarterly for the composite dealers, it is 13th after the quarter. GSTR 3B monthly, 20th of next month. GSTR 3B for the quarterly filing of composite dealers, they have to file on quarterly basis on 22nd or 24th of the after the quarter. GSTR 9, that is annual return, 31st December, that is for the normal dealers. Then what are the changes for 2026? 3-year hard stop for return filing. E-invoicing is mandatory for more than rupees 5 crore turnover. 30 days IRN rule greater than rupees 10 crore turnover. Then MFA mandatory for portal login. Then filing process. First step is to reconcile the data. Second one, upload the GSTR1. Upload all invoices relating to that particular month. Then second one is GSTR2B, that is for inward supplies. Review the GSTR2B for input tax credit. Compute GSTR3B, that is a summary assessment data, calculates the tax liability of the concerned taxpayer. Then the next step is pay tax and verify DSC and EBC. Consequences of non-compliance. Late fees, rupees 50 per day. If it is nil-rated tax, rupees 20 for nil-rated tax. Interest rate is 18% per annum. GST, and then they will block the GST number. It will lose the ITC claim. So what are the best practices for 2026? Monthly reconciliation with the GSTR 2B. New invoice series each April 1. Vendor follow-ups. Use GST combined ERP. And what are the key takeaways for the management? They have focus on 3-year hard stop, prepare for e-invoicing expansion, improve internal controls, and it ensures continuous compliance. Thank you.